Get on board, get on track, get to where you're going. And now, your EduTrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your EduTrainer and coach for our introduction into life insurance. And this whole week, we're talking about underwriting. Kind of a unique issue with our product. We actually have to underwrite it, somewhat similar to DI, medical and long-term care, but we really do a huge mortality underwriting of each client that we actually take an application on. But before we get into that today, I just want to remind you, if you haven't went out to the Lincoln Benefits site and downloaded their software, which we're going to need by next week, the reason I encourage you to do so is so that you can go page by page with us. So hop out there to their site, which we voted, by the way, the #1 for easy, friendly user software that's that we use. We think it's great. If you're coming into our business, you say, boy, I need a basic software that's easy to use. Lincoln Benefits software, the Eclipse illustration system is excellent. Just hop out to their site, lblsales.com/ETW. That's lblsales.com ETW. And remember, you can always order the life insurance manual as well as our vocabulary. Just write me at thebiz at Brokers Alliance. The Biz at Brokers Alliance, that's THEBIZ at Brokers Alliance. Well, today we're going to be talking a little bit about underwriting. This is kind of an introduction today. When I came into the business, you were either a smoker or a non-smoker. And that was so easy to deal with. And we didn't have to do exams, probably, I think it was back in the day, until we hit $500,000 of death benefit. But things have really changed. And now when we look at a client, we're looking at their Chem 24 exam, a complete blood and urine analysis. A lot of times we ask for an EKG. We've really got in depth in the way we collect APS information, attending physician statements. All those are going to be necessary to write 95% of the block of business that we talk about as fully underwritten. Later on in the week, I'll talk to you a little bit about guaranteed issue and simplified issue to kind of bring us to that side as well. Now, I want to bring up the grid here, and the first thing I want to talk about is the non-rated areas. The first one is super preferred non-smoke. Now, super preferred non-smoke is the highest classification that we have in the life insurance business at this time. And that is really for the creme de la creme. You have fantastic issues like BMI, body mass index, your height and weight, your blood pressure, your HDL, your cholesterol, sometimes even family history. All these things are incorporated to see how far up the food chain can I offer a client an effective and cheaper cost of insurance. So the top of the line class is super preferred non-smoker. The second one is called preferred plus. Again, this is an excellent status. It's a little step down. We're really micromanaging the difference in cholesterol, HDL ratio, and all the issues of height and weight. Their differentiations seem to be so small, but when you really think about how they categorize things, that's really how we have to do it. The third one is preferred non-smoker. These are all non-smoker. This is the lowest level of preferred. It used to be our highest level back in the day. So it's really, things have really changed. Then we come on with another classification called standard plus. And the second one next to standard is what we call standard non-smoke. So again, these are all non-smokers. These are 5 classifications of non-ratings where the underwriting offer, they can put you on one of these levels, one of these platforms. And I've noticed not all carriers carry the difference of maybe a secondary preferred, like preferred plus. So sometimes they only offer 2 preferreds and 1 standard. But the industry at large has kind of moved to this plate. And when we look at spreadsheets and premium grids of carriers, you'll see most of this represented today. Now, interesting enough, that doesn't mean that a standard doesn't beat a standard plus. It has a lot to do with the pricing of the product. But for our talk or our conversation today, we're really keeping it and confining it to the issue of underwriting. So when I'm looking at super preferred non-smoker, I've also noted a couple trends. When we get below 50 years of age, I'm going to have a higher possibility of women being better rated on a mortality table, not only because they die much more down the mortality line than males do, but really the thing that really is remarkable here is more and more women that are under 50 have been really moving to good diet, good exercise, great lifestyle issues. And we notice that we have a lot of females that get the super preferred because they're really managing those issues, and even preferred plus. Now, that doesn't mean that males don't get it. I'm just saying that seems to be right now an inordinate number. Females have a very good chance of super preferred. And remember this key issue. When I talk about income later in our classes, about a month from now, I'm going to be looking at females who are super preferred because the cost of insurance is so low, it makes my accumulating cash that much better. So these are our 5 basic ideas of non-rated. Now, when I think about rated cases, there are 16 tables. Some people actually use the numbers, and some people use the letters. Nobody that I'm aware of today, there's a few carriers out there, but really, fundamentally, nobody's using table 1 or in letter ratings A. It's pretty much been absorbed into the standard level. When I'm looking at 16 tables, that means that we're not declining a client all the way up to 16 tables. So if I'm at table, let's say table 4, for example, I might look at that table 4 and say, wow, that's about 400% higher than the standard cost of insurance. And as I move up the line, the number gets bigger. I've also noticed that right around table 2 or table B, in table 2, I've noticed that some carriers will actually let you price off their standard plus. A couple of those carriers actually use their standard plus rating, not their standard rating, for their table ratings, which makes their numbers a little bit more, will make it less expensive, and it really shaves off a good 8 to 10% on the actual premium. So sometimes when you're looking at table 2 and you have a carrier that gives standard plus, they're going to use the standard plus chassis, not the standard chassis, and that makes that premium lower, and of course that makes it more competitive. Interesting to note, talking about shaving, most table shaving programs are right around table 3 and 4. 4 is probably the outside one that I've seen, where they're under certain circumstances, a carrier may take anything that's table 4, and there are some exceptions, some cancers, things of that nature, and actually bring it down to standard. And those are called table shaving programs. Programs that carriers deploy who they feel certain areas, certain ages, certain diseases, that they can actually shave off what would normally be a table rated case and shave it down to a standard case. And this is really excellent. And some of these, most of the market right now lets you shave all the way up to age 70. There's a few carriers out there that actually let you shave up to 75. So this number is getting a little older. We're just dipping into the age 75 era. And of course, most of the market for shaving technology is sitting at 7. But you could be 16 tables and we're still writing it. Now you'd have to look at the economic benefit. Is the premium cost at table 16 good or bad? Now when I talk about it, we've just talked about the word table rating. And that's a percent generally of the standard mortality chassis. And when I look at that percentage of my table rating, I can have a table rating. I could also use another technology, which we use in annuities, and some carriers still allow you to use this. You could do age rated up. So let's say your client is actually 65. But they have type 2 adult onset diabetes, they're using insulin, and their body weight's really not in the game. It might be table 2 to 3, or they'll age rate up the client, and even though he's 65, actuarially, they're saying, oh no, he's age 70. They shorten his timeline. Another way that they rate is using flat extras. Now, flat extras are unique because you can have permanent flat extras and you can have temporary flat extras. Anytime I really want to remove a substandard case and I want to bring the premium down, I'm looking at flat extras. Usually there's no compensation or little compensation for flat extras, so a lot of our field force sometimes is repelled by that. But remember, flat extras can really get you in the game. If I know my client has an issue where they're not going to get to the standard 2001 CSO table, let's say the male is supposed to be around 82 to 83, and they have this issue, they have a type or a table rating 2 or 3, or they're sitting at an age rated, I might want to use a flat extra and actually make it temporary to the life expectancy. So I could do a temporary flat to wherever, it'd still be a permanent, but I want to do it to the life expectancy. Or it's just one of those flat extras that have to stay online. It could be permanent. So when you think about it, you're looking at table ratings. It could be age rated up. It could be converted even to flat extras. Some are, it's just a per thousand rate. So if I'm going to do a 5,000 rate per thousand, I just take my rate per thousand times my death benefit, and that tells me how much I'm going to have to pay extra above and beyond the standard chassis. Again, keep in mind that some carriers use standard plus. Then we have postponed. Postponed cases, even though I dread them almost always, postponed cases are cases where we've just had too many events happen too soon. A client had a cardiovascular event. It was a major one. We're trying to get insurance within 2 years. The carrier may say that's just too soon to see how things have occurred. Is he healing correctly? Is he returning to a normal health condition? They may postpone it, maybe cancer. They just had surgery. It's just too early to go ahead and underwrite it. They're not going to decline it, but they just want to say, come back in a couple of years and we'll look at it. And of course, you could, in the in-between time, look at guaranteed issue on some of this that would maybe buy you a little bit of window of coverage. But postponed, I like it because it actually delays this word, which is a declination or a decline. And your decline, remember, all our information that we cover all turns out to wind up on the Medical Information Bureau, the MIB. So a declination on an MIB is not good. And you can argue it depending upon what carrier. And this is where I get into, is a decline by one company equal to a decline on another? I saw a case recently where a carrier that we looked at, they actually declined the client, but we were able to get another carrier to take it at table 8. So remember that even though we're talking about actuarial science, we're talking about reading the same Chem 24 exams, the same EKGs and other results coming from testing, that every carrier looks at this differently. So there is no standardization. So just remember, postponed is a delay. This is a refusal of coverage. But depending upon the carrier, it may not be a decline by other carriers. That's why we like to shop many carriers, give them all the opportunity, looking at the same numbers, APSs, all the information, so they can come to a good decision. And remember, all information is going to the Medical Information Bureau. The MIB collects all this information, and when a carrier looks at a new client, they're always going to scan and run the MIB, and they're going to look at prescriptions, or as we call them for short, scripts. They're going to look at what kind is out there in the public file. And that's why we're always saying, let's look at the MIB, let's look at the scripts, and I'm looking at a part 2. I can probably get in the game what my numbers are going to be like before I start doing full-blown urine and blood analysis, as well as collecting EKGs and APSs. So that's a good introduction into underwriting, so they can give you a basic idea of what you're up against and some of the things that we look at.
This has been an EduTrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.